Dr. Lambeau. I've heard that the New York Forex market is one of the most significant markets in the world, just like the London Forex market. Wow, how cool it is!
Indeed, it is the world's clearinghouse on dollar trading. Since the US dollar is the biggest currency in Forex, participants like to pay attention when new announcements and economic data are released. Let's look at the most important economic numbers. Changes in non-farm payrolls. The Non-Farm Payroll Report, or NFP report, is an indicator of the purchasing power of American households, which reflects the employment rate and economic development of the U.S. The numbers also influence the monetary policy made by the Federal Reserve. A higher payroll figure is good for the U.S. economy because it usually impacts household incomes. It is also a predictor of purchasing power that may prop up the economy and drive the dollar up. However, if things go opposite, it is an indicator of economic recession of the U.S., causing the dollar to weaken. The NFP report is released on the first Friday of each month, along with the unemployment data and wage growth, with a few exceptions due to market holidays. ADP National Employment Report. ADP National Employment Report, also known as the ADP Jobs Report, is a monthly measure of the change in total U.S. non-farm private employment. It is released by ADP Research Institute on the first Wednesday of each month. Data from ADP is generally viewed as one of the leading indicators for projecting consumer spending. If the actual figure beats the analysts' estimates, it will favorably impact the economy and U.S. dollar. On the other hand, if the actual result misses their estimation, it will adversely impact on the economy and the value of dollar. Initial jobless claims. Initial jobless claims is a report issued by the U.S. Department of Labor on a weekly basis. It measures the number of individuals who have filed for unemployment benefits in the previous week. The figure is used as a measure of private consumption in the economy. If the number increases, it will be a signal of low consumption, signaling a downtrend of U.S. dollar. If the number is small, it means that fewer people are jobless, which is an indicator that the economy is strong. This is bullish for the U.S. dollar. Purchasing Managers Index, PMI. The PMI is a monthly measure of the prevailing direction of economic trends in manufacturing. A reading of 50% and above is a signal of economic expansion which can trigger rate hikes. A PMI reading under 50%, especially when it gets closer to 40%, may drive worries about economic recession, so the Fed might lower the interest rates to stimulate economy. Consumer Price Index, CPI. CPI measures change in the price level of consumer goods purchased by households, which is useful in analyzing inflation. A higher CPI indicates rising price on consumer goods and services. This means weaker purchasing power and the value of U.S. dollars might decline. Okay, we've learned some important factors on the fluctuation of exchange rate. The major economic indicators in the U.S. include changes in non-farm payrolls, ADP National Employment Report, initial jobless claims, Purchasing Managers Index, PMI, Consumer Price Index, CPI. Well, I have one after-class quiz for you. Are you ready for it? So here is everything we've learned today. In the next video, we'll continue to learn about some influential factors on exchange rates,